stock market has nosedived over the past few trading days. And our next guest here, Gareth Soloway, has predicted that. Let's welcome Gareth Soloway, Chief Market Strategist at In the Money Stocks.
Hi, Cindy. Thank you so much for having me. It's a pleasure.
Great. So welcome here. The first question I have for you, FOMC meeting is actually today. What are your thoughts on what the Fed will do?
So this is going to be a very interesting discussion with the Fed, and then what they tell us tomorrow at 2 p.m. Eastern time, and then the press conference that Jerome Powell will have at 2:30 p.m. Eastern time. And the reason it's so interesting is because, we've heard all about tapering, and obviously the market's nervous about that because the money that has flown into the markets from the Federal Reserve has been the lifeblood to this market. It's what's created the bubble that we're in, the bubble in assets, not only in stocks, but in many other things as well. And you could even go as far as to say NFTs are partly to blame, their popularity for just this massive amount of currency that's flown into the system. But now you have a scenario where what we're seeing in China with the debt crisis could give the Federal Reserve a little bit of an out to delay their tapering. And in addition, I think one of the interesting factors is recently we've heard about how some of the Fed officials have been for years investing in stocks, even though they've been the ones that have been pumping money into the system and inflating stock prices, right? So all of a sudden they're saying, okay, well, we're selling our stocks. We don't want there to be any kind of cross current of perception here. But the question is, are they selling it and the markets are going to top out here and we're going to see a correction, or even worse, maybe a bear market? So I think the Fed is looking for an excuse not to taper. They don't want to cause the market to decline precipitously. They don't want to make it look like they were selling at the top themselves. And I also think you have to look at the side that says, the Fed has this dual mandate, which is unemployment as well as inflation. If the markets decline, then we see the economy hurt, which raises unemployment, and then that goes against their mandate, and they have to push the stock market back up to get people hired again. And again, the reason why employment's so tied to the stock market is because people are getting so wealthy from the stock market movement that they're spending more money. They're essentially helping the economy as they get wealthier from stocks. So if you have stock prices decline, people then are in a position to say, oh no, I don't have as much money. I'm not going to go out to that restaurant, or I'm not going to do this. That hurts the economy, and unemployment essentially will rise.
Oh, wow. It's really crazy to see like the huge V from a dip, 30% dip in March, and then a huge bull run up, like just a couple months.
It's unprecedented. I mean, if you look historically, as soon as the Federal Reserve has gotten involved to this extent, it has made the dip so quick and then the rebound so strong that it has conditioned investors to not feel like they can ever really be hurt, which is actually a bad thing because, historically, we all know that eventually bubbles will burst. And then, people that are just buying initially on the dip, like 3% dip, which has been the dips that we've seen recently till this latest one, that's been where to buy. I do worry that people are just throwing money that they can't afford to lose into the markets on these little dips. And what happens when we drop 20 or 30%, or if we have a bear market where it lasts for a year or two, how do people handle that? I often liken the market and QE and the printing of money to, the market and investors are like a drug addict, right? And the money that's getting pushed into the market are the drugs, and the Fed is really the drug pusher, right? And if you pull back on that money, well, what happens to the drug addict, right? They go into, withdrawal symptoms, and that's what we saw in 2018 when the market threw a fit when the Fed started to raise rates or was talking about it. And then the question is, are we starting to see that again as tapering is getting closer and closer?
Do you think they will do it this time around or November?
My guess is it's going to be November, maybe even December or January. I think originally before the China crisis here with was it Evergreen or Everlast or whatever it is. I think that was initially the plan, is to start it in November. My guess is because of this contagion, they might even push it off to January. And then the question I would have is, well, what if by January there's another crisis? Do you just keep on saying, oh, well, we're never going to stop the spigot of $120 billion that we're printing every month that we're pushing into the system? And again, that's the question, is can they ever get out of this box that they put themselves in?
Yeah, I think talking about Evergrande, do you
Mhm.
think it will threaten global markets and cause a contagion? That's what a lot of investors are fearful of right now. Mhm.
Yeah, and I think that's one of the reasons for the sell-off yesterday, right? Is we saw this fear that it was going to be a contagion effect where you have so much, and this is probably the issue, is that the Fed has created this easy money policy where, companies, even publicly traded companies, have just taken on so much debt because interest rates are so low that you've created this massive debt bubble, and it's almost like a domino, right? Domino effect, where if you lose one thing, can it cause a spiral effect and then cause other things to start to fail, which is kind of what happened in the financial crisis in 2008 and 2009. It started with one particular thing and then snowballed. So I think that's what investors were a little bit nervous about yesterday. I think there's other underlying things like long-term capital gains taxes potentially going up being a little bit of a concern. When do you take your profits? If you've held stocks for 5 or 10 years and you have big profits, do you take them now? Do you take them before year end? And we don't have any clarity on that yet, what the policy could be. So I think that's another one as well. But there's a lot of headwinds for this market. It's a very expensive market historically. And I think investors do need to be careful. There are spots you can invest in, but you got to be nimble about it for sure.
Thank you so much for your time.
Oh, you're welcome, Cindy. Thanks so much for having me. It's been a pleasure.